What if every purchase you make in 2025 felt completely different? From online shopping to your monthly bills, a wave of new UK laws is rewriting the rules of how money moves. Hidden fees are being banned, digital payments are getting tighter security, and even the way you borrow or pay later will come with new safeguards. These changes aren't just policy updates, they're a transformation of daily life, designed to make spending safer, smarter, and fairer. Whether you're buying, saving, or subscribing, the choices you make next year will look and feel very different. Number 10. The Expanded CMA Enforcement Powers 2025. The Competition and Markets Authority, CMA, will gain significantly greater enforcement powers in 2025, marking one of the most transformative updates to consumer law in recent years. Under the new framework, the CMA will have authority to impose direct fines of up to 10% of a company's global turnover for breaches of consumer protection regulations. Previously, the organization had to pursue lengthy court processes to act against unfair business practices, but now it can respond much faster to cases involving misleading advertising, fake online reviews, and hidden pricing tactics. For consumers, this means stronger protection and faster outcomes when companies exploit shoppers through deceptive promotions or unclear contracts. The expanded powers form part of a broader push by the government to modernize digital markets and ensure fair competition, particularly in online retail and technology sectors, where misleading practices have become increasingly sophisticated. The CMA's new capabilities also extend to proactive market interventions. It will be able to demand corrective actions from businesses without waiting for complaints, ensuring issues like subscription traps, unfair refund policies, or dark pattern design are addressed early. This proactive stance aims to create a marketplace where companies compete on quality and service rather than manipulation. For small and medium-sized enterprises, the reform provides a fairer competitive environment, reducing the dominance of large corporations that have historically used complex pricing systems to confuse consumers. Additionally, the law encourages greater transparency in influencer marketing, requiring brands and social media figures to clearly label paid partnerships and sponsored content. These steps collectively reinforce honesty and accountability across all consumer-facing sectors, building a more balanced and ethical marketplace. For shoppers, the expanded CMA enforcement powers are expected to boost confidence in both online and offline transactions. Businesses that mislead or overcharge will face immediate, substantial penalties, deterring unethical behavior across industries. Analysts predict that stronger oversight will reduce instances of impulse buying driven by false urgency tactics, allowing consumers to make more informed decisions. Over time, this could stabilize prices and foster healthier spending habits nationwide. The CMA's new authority also signals a cultural shift toward protecting digital consumers as vigorously as those in traditional markets. By ensuring compliance through meaningful consequences, the UK reinforces its commitment to fair trading, transparency, and consumer empowerment in an increasingly complex digital economy. Number 9. The Terrorism, Protection of Premises, Act 2025. The Terrorism, Protection of Premises Act 2025, widely known as Martin's Law, introduces new security requirements for public venues across the United Kingdom. Named in memory of Martin Hett, one of the victims of the 2017 Manchester Arena attack, this law ensures that venues and organisers take reasonable steps to protect people from potential terrorist threats. The Act applies to spaces such as concert halls, stadiums, shopping centres, and even smaller community venues that host large gatherings. Businesses must now conduct risk assessments, staff training, and emergency preparedness plans proportionate to the size and nature of their operations. For consumers, this will likely mean enhanced security measures at events, including more visible checks and stricter entry controls. While these precautions may slightly increase ticket prices or waiting times, they are designed to create safer public environments for everyone attending entertainment and cultural spaces. The legislation introduces two main tiers of responsibility: a standard duty for smaller venues and an enhanced duty for larger premises holding over 800 people. The enhanced category requires detailed counter-terrorism planning, coordinated evacuation routes, and ongoing collaboration with local authorities. To ensure compliance, the government will establish a new regulator with powers to inspect venues and issue civil penalties for serious breaches. Although implementing these measures may add costs for organizers, the long-term goal is to prevent tragedies through preparedness rather than reaction. The hospitality, sports, and entertainment industries are being urged to integrate security into everyday management rather than treat it as a separate obligation. This approach aims to shift the national mindset from passive awareness to active prevention, ensuring that staff and attendees know how to respond swiftly during an emergency. For consumers, the Terrorism Protection of Premises Act 2025 redefines what safety looks like in public life. Venues are expected to balance security with accessibility, maintaining welcoming environments while minimizing risk. While some costs may be passed on through slightly higher ticket or service prices, the benefit lies in reduced vulnerability and greater public confidence. Experts suggest that the law could become a global model for event safety, combining practicality with compassion for victims of past attacks. By prioritizing vigilance and responsibility, this legislation ensures that public spaces remain places of enjoyment, not fear. Martin's Law stands as a commitment to every citizen's right to safety, turning painful lessons into lasting protection. Number 8. The Great British Energy Act 2025. The Great British Energy Act 2025 establishes a new state-owned company called Great British Energy, designed to accelerate the UK's transition toward affordable, secure, and sustainable power. This landmark legislation marks the government's most ambitious step yet in reshaping the national energy landscape. The company's mission is to invest directly in renewable projects such as wind, solar, tidal, and nuclear energy, reducing the country's reliance on volatile international markets. For consumers, this could mean more stable electricity prices and a gradual reduction in household bills as renewable generation increases. By centralizing investment and focusing on public ownership, the Act aims to ensure that profits from energy production are reinvested into local communities rather than distributed to overseas shareholders. Over time, this structure is expected to build a stronger, fairer energy market that prioritizes both affordability and sustainability. The law also introduces incentives for households and small businesses to adopt cleaner technologies. Grants for solar panel installation, heat pumps, and home insulation will be expanded, helping families cut energy consumption and lower costs. Additionally, Great British Energy will collaborate with local councils to support regional renewable hubs, ensuring that rural and urban areas alike benefit from the green transition. These measures not only aim to reduce carbon emissions, but also create new employment opportunities across engineering, manufacturing, and environmental sectors. Although the initial funding for the project requires significant public investment, the long-term vision is to achieve self-sufficiency by reducing dependence on imported fossil fuels. Analysts predict that this shift could strengthen the UK's energy independence while making clean energy more accessible for ordinary households. For consumers, the Great British Energy Act 2025 offers tangible financial and environmental benefits. As renewable capacity expands, competition is expected to grow, potentially driving down the average unit cost of electricity. Greater transparency in pricing and reinvestment strategies will also allow citizens to see where their energy payments are being used. Moreover, the Act encourages innovation through partnerships with private firms focused on next-generation battery storage and carbon-free heating solutions. By integrating sustainability into the foundation of national energy policy, this legislation lays the groundwork for long-term economic stability. Ultimately, the Great British Energy Act ensures that clean energy is not just a policy goal, but a shared national asset supporting every household's financial and environmental future. Number 7. The Steel Industry Special Measures Act 2025. The Steel Industry Special Measures Act 2025 represents a major shift in how the UK supports and regulates one of its most vital industrial sectors. Following years of uncertainty caused by global price fluctuations and high energy costs, this legislation gives the government greater power to intervene in the steel sector during times of crisis. It allows ministers to temporarily take control of operations or provide emergency financial assistance when closures threaten national supply chains or employment. For consumers, the impact might not be immediate, but the ripple effects will reach construction, manufacturing, and household goods markets. By stabilizing production, the Act aims to prevent price surges on everyday items such as cars, appliances, and infrastructure materials that rely heavily on steel. This safeguard ensures the industry remains competitive while protecting thousands of skilled jobs across the UK's industrial heartlands. The law also focuses on promoting green steel initiatives and reducing carbon emissions from production. Companies will be incentivized to adopt cleaner technologies, such as hydrogen-based furnaces, through government-backed funding and tax reliefs. These sustainability measures align with the UK's broader climate goals while encouraging innovation in domestic manufacturing. However, compliance will come with new reporting requirements on energy efficiency and environmental performance. Manufacturers failing to meet the updated standards could face penalties or reduced access to subsidies. By linking financial support to sustainable progress, the Act encourages the sector to modernize responsibly, ensuring that industrial growth does not come at the cost of environmental degradation. Consumers may eventually benefit through more ethically produced goods as demand grows for greener, locally manufactured materials. From an economic perspective, the Steel Industry Special Measures Act 2025 is about resilience and security. A strong steel sector supports national infrastructure, defense, and renewable energy projects. The legislation's intervention powers provide flexibility to respond swiftly when global supply disruptions occur, preventing sharp rises in prices for goods that depend on steel inputs. For workers, it promises job stability and investment in training programs that prepare them for a cleaner, more technologically advanced industry. For consumers, it helps stabilize the cost of essential products by maintaining consistent domestic supply. Overall, this Act reinforces the UK's industrial independence while steering one of its oldest industries toward a modern, sustainable, and economically secure future. Number 6. The Water Special Measures Act 2025. The Water Special Measures Act 2025 was introduced to tackle long-standing issues within the UK's water industry, following years of public frustration over pollution, leaks, and executive mismanagement. This law grants the government new powers to intervene directly in the operations of failing water companies. It allows regulators to suspend or restrict executive bonuses, impose stronger financial penalties, and even place companies under temporary public control if they fail to meet environmental or service standards. For consumers, this means greater accountability from providers and a renewed focus on delivering clean, reliable water services. By holding senior management responsible for operational failures, the law seeks to prevent further declines in water quality while ensuring that investment is directed toward infrastructure improvements rather than shareholder payouts. A central goal of the Act is to restore public trust through transparency and sustainability. Companies will be required to publish detailed reports on leakage rates, sewage discharges, and investment spending, giving consumers a clearer view of how their bills are used. Regulators will also have enhanced authority to enforce performance targets, with consistent monitoring across all regions. While these reforms could initially result in increased costs as utilities upgrade outdated systems, the expectation is that long-term efficiency gains will stabilize prices. The Act further encourages innovation through grants and incentives for green water technology, including recycling systems and advanced filtration solutions that reduce environmental impact. By linking corporate accountability to measurable outcomes, the government hopes to create a cleaner, more sustainable water network that benefits both consumers and the environment. For households, the effects of this act will likely appear gradually as providers adjust to the new framework. Water bills might fluctuate slightly depending on regional investment needs, but the emphasis on performance transparency gives customers stronger grounds to challenge poor service. Environmental groups have praised the law for its commitment to reducing pollution in rivers and coastal waters, while economists note its potential to stimulate job growth in infrastructure and environmental management. Ultimately, the Water Special Measures Act 2025 represents a decisive step toward protecting public interests and natural resources. By ensuring that water companies prioritize sustainability and accountability over profit, this legislation strengthens consumer protection and sets the foundation for a more resilient and environmentally responsible industry. Number 5. The Finance Act 2025-26 reforms. The Finance Act 2025-26 introduces a series of updates designed to strengthen the UK's fiscal stability while reshaping how individuals and businesses manage their money. This legislation covers adjustments to income tax thresholds, national insurance rates, and corporate tax policies, reflecting the government's response to inflation and public spending pressures. One of the most discussed changes is the revision of capital gains and dividend tax rules, which could affect investors, landlords, and self-employed professionals. By narrowing tax-free allowances, the government aims to generate more revenue from wealth-based income sources, placing a stronger focus on fairness across economic brackets. For average households, this may translate to slightly higher deductions, but the broader goal is to support national investments in public services, energy infrastructure, and cost-of-living relief measures. Another crucial element of the Act involves updates to digital service taxation and anti-avoidance provisions. With online businesses expanding rapidly, the law ensures that multinational tech firms contribute a fairer share of taxes to the UK economy. It also tightens reporting obligations for offshore income, seeking to close long-standing loopholes that previously allowed profits to escape domestic taxation. For small business owners, the government plans to simplify certain filing procedures while introducing more robust digital record-keeping requirements through Making Tax Digital (MTD) expansion. This aims to make compliance easier while improving transparency across the system. While larger corporations may experience a rise in effective tax burdens, the long-term vision is to create a more equitable financial structure that rewards accountability and sustainable growth. For everyday citizens, the Finance Act 2025-26 carries both opportunities and adjustments. Individuals may need to reassess savings strategies, as shifts in tax-free allowances could impact how interest, dividends, or investments are managed. Meanwhile, continued incentives for green investments and renewable technologies encourage people to adopt sustainable financial choices. Although some sectors may face short-term strain due to reduced reliefs or new levies, the focus on fair taxation seeks to protect essential public funding. These changes aim to modernize the UK's fiscal landscape, creating a system that better reflects today's digital, globalized economy. By balancing fairness with fiscal responsibility, the Finance Act represents a pivotal effort to stabilize the economy while preparing citizens and businesses for a more transparent and efficient tax environment. Number 4. The New Payment and Anti-Fraud Regulations 2025. The New Payment and Anti-Fraud Regulations 2025 mark a critical development in safeguarding digital transactions and protecting consumers from the surge in online fraud. As the UK moves further toward a cashless economy, these regulations introduce stronger requirements for banks, fintech platforms, and payment processors to identify and prevent suspicious activity. Financial institutions must now refund victims of authorized push payment fraud more swiftly unless negligence is proven. This means if someone falls victim to a scam through no fault of their own, they are more likely to recover their money quickly. The law also obliges payment providers to introduce real-time monitoring systems capable of detecting unusual behavior, blocking high-risk transfers before funds disappear. These updates aim to restore confidence in online payments, where convenience has often come at the cost of vulnerability. Another major change focuses on accountability and transparency across digital payment systems. The regulations require clearer communication about transaction risks and limit how businesses handle sensitive customer data during payments. Firms will need to publish fraud statistics and maintain stricter customer authentication processes. For consumers, this might mean extra verification steps when making purchases or transferring funds, but the payoff is greater security and peace of mind. By holding banks and fintech firms directly responsible for losses linked to scams, the government hopes to create stronger incentives for innovation in fraud prevention. This shift also reduces the burden on individual consumers, who have historically faced lengthy disputes to recover lost money. With cybercrime and phishing scams on the rise, these rules position the UK as one of the toughest markets for financial fraud too. Clearance. For the everyday user, the new system may initially feel slower due to enhanced checks, yet it builds a safer foundation for digital commerce. Online shoppers, freelancers, and small businesses that depend on instant payments will benefit from greater reliability and reduced exposure to scams. Over time, this transparency will encourage more people to use electronic payment options confidently, supporting the continued growth of digital banking. The law also strengthens the relationship between regulators and payment providers, ensuring they share data more effectively to identify emerging fraud patterns. Ultimately, the Payment and Anti-Fraud Regulations 2025 seek to strike a balance between speed, convenience, and uncompromising security in the UK's digital financial landscape. Number 3. The Product Regulation and Metrology Act 2025. The Product Regulation and Metrology Act 2025 is designed to give the UK government greater flexibility in setting and updating product standards after Brexit. This law empowers authorities to regulate everything from product safety and labelling to the units of measurement used across industries. For consumers, this could mean visible changes on store shelves, such as redesigned packaging, updated measurement units, or reformulated products to meet new national standards. The aim is to align safety requirements while supporting innovation and sustainability in manufacturing. With growing concern over imported goods and inconsistent labeling, this act provides a framework for ensuring products sold in the UK meet specific national quality benchmarks. That means what consumers buy, whether food, cosmetics, or electronics, will need to meet more transparent and consistent regulations. This law could also influence pricing. When manufacturers adjust their production methods or repackage items to meet new standards, those costs may gradually pass on to the consumer. However, this process also enhances consumer confidence, ensuring that items meet local health, safety, and environmental expectations. The Act additionally supports eco-friendly production by encouraging companies to design goods that are more recyclable and energy efficient. For example, home appliances might feature stricter energy labeling requirements, helping households identify products that lower long-term energy bills. By giving regulators faster powers to adapt standards, the law allows the UK to respond more quickly to emerging risks or technological advances, creating a more flexible and consumer-focused marketplace. For everyday shoppers, the biggest benefit lies in clarity and protection. Clearer labeling means fewer misleading claims about origin, size, or quality, while stronger enforcement reduces the risk of unsafe or counterfeit items entering the market. Consumers will have access to more accurate product information, enabling smarter purchasing decisions. Businesses that fail to comply could face significant fines or product recalls, motivating brands to maintain high standards across production lines. This law also supports small manufacturers by simplifying approval processes, helping them bring new compliant products to market faster. Overall, the Product Regulation and Metrology Act 2025 aims to balance safety, sustainability, and innovation, ensuring every purchase reflects true value and authenticity in a rapidly evolving post-Brexit economy. Number 2. The Buy Now, Pay Later Regulation 2025. The Buy Now, Pay Later (BNPL) regulation arriving in 2025 represents one of the most significant shifts in how short-term credit is managed in the UK. Over the past few years, BNPL services such as Klarna and ClearPay have exploded in popularity, allowing shoppers to split payments with little oversight. The new law aims to place these services under the same regulatory umbrella as traditional credit, overseen by the Financial Conduct Authority (FCA). This means that all BNPL providers must perform affordability checks before approving payments, ensuring consumers can realistically manage repayment. For many, this will prevent impulsive debt accumulation that often goes unnoticed until late fees begin piling up. The measure also requires clearer terms and transparent cost breakdowns, helping users understand the real impact of delayed payments on their finances. A major part of this regulation focuses on consumer protection and transparency. Providers will no longer be able to advertise BNPL as a risk-free solution, and penalties for misleading marketing will increase significantly. Every transaction must display repayment timelines, potential fees, and consequences of missed payments in plain language. This could dramatically reduce the financial strain on younger consumers, who make up the largest segment of BNPL users. The regulation also pushes lenders to report BNPL usage to credit agencies, creating a more accurate picture of an individual's financial health. This transparency ensures that borrowing habits are visible to other lenders, discouraging overextension of credit. While some users may find it slightly harder to qualify for BNPL plans, the trade-off lies in improved long-term financial stability. Economists expect the reform to reshape spending behavior, particularly online. Shoppers may begin reconsider it. Purchases when faced with clearer repayment terms, curbing the culture of buy now, worry later that has defined modern digital retail. Retailers relying heavily on BNPL promotions might see an adjustment period as customers adapt to the stricter approval process, but overall, financial literacy could improve across the population. For families managing tight budgets, this law creates a much-needed safety net, protecting them from the psychological ease of deferred payments that often lead to spiraling debt. The BNPL Regulation 2025 encourages smarter, more conscious consumer habits, fostering a healthier relationship between spending, saving, and borrowing in the UK's evolving digital economy. Number 1. The new Consumer Protection Regime, DMCCA 2025. The Digital Markets, Competition and Consumers Act, DMCCA, coming into effect in April 2025, is set to redefine how shoppers experience online and in-store purchases. This law grants the Competition and Markets Authority, CMA, greater power to act against misleading business practices. Hidden charges, fake reviews, and unclear subscription models will face strict penalties. For everyday consumers, this means more transparent pricing and fewer surprise fees at checkout. The days of companies burying costs in small print are numbered, creating a fairer environment where people can clearly see what they are paying for. This shift not only enhances consumer protection, but also encourages more honest competition among retailers, striving to build stronger reputations through clarity and fairness. Beyond banning deceptive pricing, the DMCCA introduces a tougher stance on subscription traps, one of the most common ways people lose money unknowingly. Companies must now provide clear reminders before renewals, make cancellations easier, and display total costs up front. This move aims to protect millions of users who often forget recurring payments for unused apps, magazines, or streaming platforms. Online marketplaces will also be held responsible for verifying the authenticity of product reviews, ensuring shoppers can rely on genuine feedback rather than manipulative marketing tactics. These updates promise a more trustworthy digital marketplace where transparency replaces trickery and fairness becomes the standard of modern commerce. Economically, the DMCCA could influence spending habits by reshaping how people perceive value. When costs are clear and experiences are honest, consumers become more confident in making informed choices. Businesses might initially face higher compliance costs, but the long-term benefit lies in rebuilding public confidence and reducing complaints that erode customer loyalty. Analysts predict that this transparency wave will lead to a gradual decline in impulse spending on misleading offers, encouraging smarter purchasing decisions. It also strengthens accountability in e-commerce, a sector that continues to dominate the UK's retail landscape. With enforcement beginning in 2025, this law marks a critical step toward a more balanced marketplace where fairness, clarity, and responsibility are no longer optional. For millions of households, these protections will redefine what it means to shop safely in a rapidly evolving digital economy. The landscape of how people in the UK spend, save, and manage money is undergoing one of its biggest transformations in decades. With the new 2025 UK laws, every area of daily life, shopping, energy use, digital payments, and even event security is being reshaped to create a fairer and more transparent economy. These reforms are not just about policy, they are about empowering consumers, holding corporations accountable, and ensuring that essential services work for everyone, not just big business. From the Buy Now Pay Later regulation protecting borrowers to the Great British Energy Act driving down energy costs, each law reflects a step toward greater financial stability and sustainability. The goal is to build a system where fairness, clarity, and responsibility guide every transaction. For everyday people, understanding these changes isn't optional. It's essential to staying ahead and making smarter financial decisions in 2025 and beyond. If you found this breakdown helpful, like this video to support the channel, subscribe for more updates on UK laws and personal finance, and turn on notifications so you never miss an important change that could affect your money. Drop a comment below and share which 2025 law you think will have the biggest impact on your spending habits. And if you want to stay informed, check out our related videos on UK finance updates and consumer rights in 2025. Your future wallet will thank you.